Charlie Munger said the first $100,000 is the hardest milestone in building wealth. He said that in the 1990s. That number has never been updated, and almost nobody has done the maths to figure out what it should be today, especially if you're investing in Europe. That's what this video is about. Quick note, this is not financial advice. Do your own research. Let me be precise about what Munger actually said, because a lot of content misrepresents it. At a Berkshire Hathaway shareholder meeting in the mid-1990s, Munger told the audience, "Get your first $100,000. He called it brutal. He said he didn't care what sacrifices it took. And then he said, once you have it, let it work for you. His point was not magic, it was compounding. $100,000 base at 7% annual return generates $7,000 in the first year. That starts to feel real. That starts to be money you can see. Before that level, returns are small in absolute terms. Not because compounding is not working, it always is, but because the base is too small to feel it. That's the psychological and mathematical insight behind the advice. It still holds. The number, however, doesn't. $100,000 in the mid-1990s is not the same as $100,000 today. Adjusted for inflation, that original figure is worth roughly $210,000 in 2026 dollars. Convert that to euros for a European investor and you are looking at approximately 160,000 to 190,000 euros, depending on which adjustment method you are using. Every article and video that tells you to hit your first $100,000 is repeating a number that has not been updated in 30 years. For a European investor in 2026, the equivalent milestone is closer to 160,000 euros. But here's what's more interesting than just updating this number. There is not one milestone, there are 5, and each one represents a genuine mathematical shift in how your portfolio behaves. Before I walk through the 5 milestones, you need one formula. It's simple. Annual contribution divided by your expected return rate. That's the point where your portfolio's annual returns first exceed what you are putting in each year. For someone investing 500 euros per month, 6,000 euros per year, at 7% annual return, that number is 86,000 euros. At that exact point, your portfolio starts generating more for you than you are adding manually. That's the first gear change. 86,000 euros. That's where compounding first takes the lead. Below this level, you are the primary engine. Your contributions are doing more work than your returns. Above it, the portfolio starts contributing more than you are. This doesn't mean you stop contributing. Far from it. But it's the first moment where the mathematics shifts in your favor. At 500 euros per month, most investors reach this in roughly 10 years. That's the hardest decade. Consistent, unglamorous, slow feeling. But once you cross it, something changes. Not just in the numbers, but in how the portfolio feels. 160,000 euros. This is where Munger's original insight lands in 2026 for a European investor. At 7%, a 160,000 euros portfolio generates roughly 11,200 euros per year in returns. That's more than a month's net salary for most European workers. You can feel that number. It's no longer abstract. This is also the point where most investors stop feeling like they are pushing the boulder uphill. The portfolio has enough mass that it starts to feel like something real. The discipline shifts from grinding to maintaining. From the crossover point to here takes roughly 4 more years at the same contribution rate. The curve is already accelerating. 250,000 euros. At 7%, this portfolio generates 17,500 euros per year in returns. That's almost 3 times what you are contributing annually if you are putting in 6,000 euros per year. This is the gear change that most people never have a name for. The portfolio is no longer just working alongside your contributions. It's working at 3 times the speed. Your manual effort is becoming a smaller and smaller fraction of total growth. From 160,000 to 250,000 euros takes roughly 4 more years. Notice the pattern. The gaps between milestones in calendar time are shrinking, even though the euro gaps are growing. That acceleration is compounding in action. 500,000 euros. This is where the numbers enter a different category entirely. At 7%, a 500,000 euros portfolio generates 35,000 euros per year in returns. That is close to or above the median annual salary in most European countries. Let that land for a moment. A 500,000 euros portfolio is generating the equivalent of a full-time salary without you working, without you contributing anything new, just from the compounding of what is already there. You are not financially free at this point. The safe withdrawal rate for a long retirement is closer to 3.5%. which means 500,000 euros generates a sustainable 17,500 euros per year of withdrawals. But in terms of return generation, you have replaced a median European income. From 250,000 to 500,000 euros takes roughly 8 years at the same rate, still accelerating. 1 million euros. This is the number that earns the term escape velocity. At 7%, a 1 million euros portfolio generates 70,000 euros per year in returns. That's a full professional salary, generated without you working a single day. Your portfolio has become the employee. At this level, the portfolio is fully autonomous. If you never contributed another euro, the returns alone would continue to compound and grow. The annual growth in absolute euros now dwarfs anything your contributions could add. From 500,000 to 1 million euros takes roughly 10 years. The same amount of time it took to reach the first milestone at 86,000 euros. Except instead of grinding from zero to the first gear change, you went from salary replacement to complete financial autonomy. That compression is what escape velocity actually means. These numbers are built on one specific profile: 500 euros per month, 7% annual return. Your milestones will be different. If you contribute more, your crossover point is higher, but you reach it faster. If your return differs, every milestone shifts accordingly. The formula is always the same: your annual contribution divided by your expected return rate. That gives you your personal crossover point. Everything above that scales from there. What matters is not memorizing these 5 numbers. What matters is understanding the shape of the journey. The first decade is the hardest. Not because compounding is not working. It is. But because it has not yet built enough mass to feel powerful. Once it does, the acceleration takes over, and the later milestones come faster than the earlier ones. Munger was right. He just gave you the number in 1990s dollars. For a European investor in 2026, the updated version of his milestone is around 160,000 euros. And beyond that, there are 4 more gear changes waiting. Pick the milestone that is closest to where you are now. Focus on that one, not the full ladder, just the next step. The others will follow. Money is a tool. If you don't learn to control your finances will control you.